And this is where I think a lot of the gold bugs talk a very good game, where governments are going to have to back their bonds with a 5% or a 1%, 1 to 5% in gold. And I think, well, that's all good and well, but there's no way to ensure that they've got the gold. There's no way to independently verify that it is gold. And there's no way to confirm that they are going to pay that out at the end of the bond expiration. So I look at that and I think, if we're able to, if governments are smart, they would put Bitcoin in. Or if investors are smart, they would ask the governments, hey, we're going to buy these bonds, but we want to have 5% time locked in Bitcoin so that you can't screw us out of it, and we can have full visibility on where that Bitcoin is. And so I look at that and I think there's $60 trillion per annum that gets refinanced in these bond markets. If you had 5% of that put in, that's $1.2 trillion that would basically be put into Bitcoin as collateral for those future bond payments. Now, all of a sudden, that's basically double the current market cap of Bitcoin. And if you try and squeeze $1.2 trillion per annum into $2 million of available coins, all of a sudden, this is where you get to, your number on that multiplier, the Bitcoin multiplier. For every dollar in, it's $2 out, or whatever the number is. All of a sudden, that changes dramatically. It's not $1 in, $2 out. It goes $1 in, $20 or $50 out. So this is where the numbers get really crazy, because when you understand the enormity of the other markets and how little in comparison to those Bitcoin actually is, this is where you get the exponential. And this is where I think Bitcoin really is the first exponential asset that I've seen.